Good morning, traders and investors. Welcome back to another episode of Benzinga's Pre-Market Prep. This is my job now, working here at Benzinga. But one of my first jobs in life was when I was 15, 16 as a lifeguard. And we had to learn how to throw the little things out in the water to save someone had they been drowned in. And that's what happened to Intel. Got a lifeline, saved while they were drowning. We've talked about Intel's problems. Some positive news finally for Intel yesterday. Also some positive news for Microsoft. Tech bouncing back today after a red day yesterday. Apple bringing us lower yesterday. Now tech is starting to come back. We will talk about that as well. Of course, the Fed's interest rate decision coming tomorrow. That will be a big topic of discussion today. Not a lot of earnings to talk about, but we do have some retail sales data coming at 8:30 this morning, which usually isn't a big market mover, but I think these days you never know which economic data points are going to move the markets. We'll bring you those numbers at 8:30 as well. Without further ado, let's go ahead and get the show started. Welcome to Benzinga's Pre-Market Prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
All right, before anyone asks, no, working as a lifeguard was not really like Baywatch, but it was fun. It was a good, first job as a teenager. So if you've got kids out there and they're looking for, I guess the summer's over now, so that was the time to do it. All right, S&P 500, I mentioned, we're bouncing back today, up 0.4% here. Let's go over to the Qs, up 0.6% for the Qs. So big bounce back for tech yesterday after closing down again about 0.5%. And honestly, we'll talk about it, but a lot of the big tech did hold up decently well yesterday. It was just, of course, Apple is just such a big weighting in, both the Qs and the S&P 500 that when Apple is going to be down, nearly 3% on the day, it's going to be hard for those indices to really move that much higher. You've got Apple coming back flat. Let's pull up the pre-market chart because this is pre-market prep. We'll wait for that to load in Benzinga Pro. But Apple bouncing back a little bit here. It was lower when I first came in this morning. Let's go ahead and bring in Dennis. We'll wait for these charts to load. Dennis, how are you doing this morning?
Doing pretty good. How's David Hasselhoff doing here this morning?
Hey, he's doing well. I won my fantasy football matchups last night, so that was good. Happy about that. Other than that, pretty uneventful night.
Wife is sick. I don't know if she has COVID or what she has, but she can't get out of bed. So it's been a busy morning for me because normally she gets the kids on the bus, makes the breakfast or makes the lunches and does all that. So that was on me today. But I also want to say it's her birthday too. So happy birthday to my wife. She's 45. Not really celebrating very nicely though, being sick. So it's never fun to be sick.
It's my sister's birthday tomorrow.
Oh, well, look at that. We're all connected. We're all connected. Lots of news here.
Yeah.
Two major stocks having major moves here. News broke last night. Let's start with the dog of all dogs, the stock that I have in my long-term portfolio and absolutely hate it. It is Intel, and it got the lifeline like you were saying here last night. Amazon throwing it out there. Intel grabbing it. Will they stay afloat or will they somehow lose the lifeline and just sink to the bottom?
Well, if we go, here I'll give the exact.
Let's give the headline.
Give the exact headline. So we had. Well, wait. There was two. So wait. There's the Intel shares jump on reports of $3 billion military chip funding.
That was not during the day yesterday.
That was while the market
had the rally during the day yesterday.
That was Yep.
So multiple lifelines, really. We had the rally from, obviously, the funding there from the government during the day. And then right at 4 p.m., and I mean right almost on the button, came the release with Amazon. And that was right at 4 p.m. yesterday.
Yeah, so this Intel to produce custom AI fabric chip on Intel 18A and custom Xeon 6 chip on Intel 3 for AWS multi-year, multi-billion-dollar collaboration accelerates development of chip manufacturing in Ohio. So, when you're a beaten down stock, having two major positive headlines coming in the same day will certainly help things out. So, again, earlier in the day, you had the Intel awarded up to $3 billion by the Biden-Harris administration for secure enclave, which that one is, less of a surprise because we knew through the Chips and Science Act that Intel was already set to receive a lot of this direct funding. The AWS the Amazon and Intel one, that one, I think, was a little bit more of a surprise for people. So, either way, the reaction was that the Intel stock closed up $1.25 yesterday, so about a little bit more than 6%. Now it's up about another $1.50 this morning, 6.8%. So in about one day, the stock has gone from, you go back to, let's see, where were we yesterday?
1950 to 22. It was up over 23 last night on the headline as well. So big pop. Nice comeback here. Does this mean, and I posed this question to Twitter last night, and I will pose it to the chat as well. Is this just another suckers rally in Intel and just another selling opportunity? Or is this the start of the turnaround story? I don't know if I have the answer to that. I asked Twitter, Jim Tassoni, obviously I have Jim on lots. He says, fool me once, shame on you. Fool me 5,000 times, ... And that's the truth, isn't it? Every time Intel pops up on a headline, it seems to just leak the gains away eventually. Alex says he's optimistic. Then you've got just mixed results just from the Twitter. Anwar thinks it could be a turnaround story. Ann thinks going to 28.50. Zibin, if I'm saying that right, thinks thinks it's the GE turnaround, like the GE turnaround. So and Frank thinks they got the U.S. subsidiaries for their chip factory, but will always be a laggard. So I don't know. Lots to think about here, lots to chew on. I don't think anybody really has the answer to it here. So chat, what do you guys think? Some people think turnaround. I still have part of the position long-term portfolio, half the loss, and then I've been sitting on it. The good news for me, though, AB, is I was actually long this in my trading account because it was perking up and starting to look good, and it had the good day yesterday. So I'm like, that's one that I was holding just for an overnight trade. So I bought the close at $20.91, and I wasn't in the trade for more than a minute, and that headline broke, and I did sell the trading position off of that because you take that instant gratification when you get it up at 22.55. I was able to sell it. It's 22.36 now. So still have the core long-term position, but just happen to be long in the trading account. So I was pretty happy about that.
Yeah, it's funny how that happens sometimes, that a stock starts perking up for a few days, and the next thing you know, there's a news catalyst that brings the stock higher. And we also had the news a couple of weeks ago that that Intel was, fighting off activists. Maybe it's because the company knew that they had some positive things in the pipeline, and they were saying, hey, we know what we're doing. We don't need people coming in here and telling us what to do. I know it doesn't look like it, but we know what we're doing, and we've got some things in the pipeline. And you saw that, of course, yesterday with both those positive news lines hitting. At the end of the day, though, the stock went from $19 to $22. It's not like the biggest move in the world. Percentage-wise, it's significant, but it's not like the stock doubled overnight. So
no, and it didn't bail me out on my 36 buy, which is where I'm averaged in on my long-term position. So, I got a long ways to go to be made whole on this one. And obviously, I've taken the loss, and maybe I'm going to take the whole loss. But I do think there is the potential. I thought it back at 30. I thought there was potential for them. And then they started selling off assets, and I was like, well, I didn't know it was going to get this ugly where they're looking to raise cash everywhere here. So, but the AWS lifeline, the lifeline from the federal government there yesterday, a few lifelines getting thrown here. So Intel's not going to go down without a fight.
Yeah. So just looking at the technicals here, we're on the daily here, but you were consolidating down here around $19, now perking back up, of course, to 22. So if you're looking for potentially a gap fill, that's all the way up to $30. Go down to a shorter time frame here on Intel. You can see just in the past few days how much this has really gone higher. Now let's move over to another tech stock that has some positive news. Let's talk some Microsoft. So Microsoft, closed in the green yesterday. Again, big tech, really held up well outside of Apple for the most part. But Microsoft announced a $60 billion buyback, Microsoft's biggest buyback ever. And I mean, you might say like, okay, well, how big of a deal is it? The stock's only up, a little bit less than 2%. Yeah, but you got to realize this is a 3.2 trillion, that's trillion with a T, dollar stock. So, kind of hard to see, unless you're NVIDIA, you're not going to a lot of times get these like 5-10% moves. But either way, $60 billion buyback, big deal for Microsoft. So that is in the green, trading higher.
Big move here for Microsoft, and unsurprising here that, it is responding like that. I mean, they don't care that they're trading 30 times earnings or 32 times earnings. They're just looking like they're going to go the Apple way, maybe. This is how Apple obviously can continue to grow EPS for years and years, was just through buybacks. Even though they weren't growing the top line, they were growing the bottom line. Just because you bring down that share count, the EPS goes up. So that's a consideration here too for Microsoft. It's trading up only like $2 on this last night. Buddy from Bright Trading was messaging me, shouldn't it be up more than this? And I was like, yeah, I think so. I think it should be up more than this. 433, 439. So good call by the Bright Trader. Boom. I mean, this is what, trading is about too. My trading, and I talk about and try to teach every once in a while, is about news interpretation, understanding that, hey, this is an important headline and it's likely to continue, or this is not that important of a headline and this bounce is likely to fade. I mean, if you can start to understand those things, you're going to be a lot better off. Microsoft continued last night. It's up another 6 points here, 439. Now you get to a point hard to chase at this point because now I feel like it's fully priced in. $60 billion buyback, stock up $1.50 last night, not really priced in. $60 billion buyback, stock up $7, a little bit more priced in. But again, Fed may cut interest rates tomorrow. I just am not bearish stocks overall here. I mean, obviously our guest yesterday was, makes you a little bit spooked when you're starting to hear about the economy. But then we're quick to say, I mean, the stock market's ignored a lot of that stuff for a long time. Still buy the dip seems to be winning right now, even with sell the rip to a certain extent. But maybe we stay range bound. I think the Fed's going to dictate the overall course of action for Microsoft tomorrow as well.
Shout out to Kurt, new YouTube member in the chat. Kurt, you are allowed to post a ticker, a stock, if you want us to check it out. That's
free stock analysis for Kurt.
Free stock analysis.
Yes.
The thing with, I feel like there's always certain things that if someone's overall bearish, you can point to not be that thrilled about the market. And my biggest thing is, if from a macro sense, if the bear case keeps changing, then I start losing, and like for a while, obviously it was about inflation, and then it was, okay, now the labor market's weakening, and like all these different things. Like the bear case, right now feels like it's shifting because we have the economic slowdown that we've seen in the labor market, but then the Fed's getting ready to cut rates to address that. So I just don't know. Like I'd rather just wait and see, because I'd rather not, be like, oh my God, I'm so spooked right now by the market, and sell everything and then watch it keep going up, because that's what it's been doing. So the trend right now has still in large part been positive, obviously outside of a couple, sell-offs that we've had in the past few months. But ultimately we're still right around all-time highs, Dennis, in the
AB, and to all those points, it's hard to start saying, yeah, this is the time to sell stocks now when we're going into a rate cutting cycle.
Right.
So that's where I'm just at. It's, we can, say, hey, we're close to, we could be going into recession. A lot of these things could happen. But what we know almost with certainty is that the Fed is now going to be working with the economy instead of against the economy. And when rates go down, it undeniably helps all companies. So, you look here, and I've said this before, if you would have just been listening to the Fed in November of 2022, is that when they started talking about cutting the rates or raising rates for inflation? I think it was no, maybe not November 2021. It was November 2021. I'm losing years. If you would have just listened to the Fed and they said, we are going to start raising rates, you would have been selling the S&P. Maybe it's not the best example because the S&P did sell off for 2 years, but it's higher than that. But like IWM, it's still a good example too, because we sold straight off. But a better example is even the IWM. It's up at 240. Now we've been in 3 years where basically small caps have been suppressed because of a higher interest rate environment. Now they're telling you that they're cutting rates, and they're going to start cutting maybe aggressively. hard to be bearish stocks. And even to the point on the S&P, S&P just continues to go higher because the tech trade worked no matter what. But I mean, you're sitting and looking in November 2021, then we went into a 2-year bear market, 2.5 years really before we got back to those highs. So listen to the Fed with your long-term thesis. Listen to the Fed with your overall sentiment in trading. The Fed's telling you rates are going down. That doesn't make me want to sell stocks.
Just a couple of points I wanted to address, and we'll move on to some more individual stock headlines. Robert saying, doesn't the market historically sell off when they cut? And yeah, we talked about that with Dietrich showed us the last 2 times the Fed had cut 50 basis points. The market actually went lower, but that's because of the economic backdrop was against, a worse environment, 2007, 2001 .com bubble that they were basically forced to cut 50 basis points. And you could make the argument they're kind of forced to cut 50 basis points here, but I would argue that the background, what's going on, with the macros is a lot stronger than in those cases. So I don't think it's really apples to apples comparison there. And then Jay makes a good point as well, which we discussed with Greg Weldon yesterday, that the Fed is late on cuts, just like they were late to start rising, which I don't disagree with that, because again, when you talk to economists, whether it's Blue, whether it's Greg, most of them would say like around 1% higher than the running inflation rate would be where you want to be at, which would put us like, almost 2% lower than we're at right now in the Fed. So unless they cut 50 basis point 4 times in a row, which isn't going to happen, that's what would bring us to that kind of like, 3.5%, 3% Fed funds rate that we'd be, kind of looking for right now in terms of what I would think would be like the best spot to be in. So they're probably going to go a little bit slower, just because I still think like they're still gun shy about the inflation. Like the last thing in the world they want to do is start cutting and then see inflation start rising.
Creep back in.
So even though they're cutting now to address this to address the labor market slowdown, I still think like inflation is probably, of chief concern until the economy starts weakening even more. Then that becomes the chief concern. It's not inflation anymore. So it's all, shifting, but we shall see. But let's go ahead
it's just, you come and again, we can say, well, typically, in the history, and Jim Tassoni was showing us these slides there too, when they're cutting by 50 basis points, there's major problems out there.
Maybe it was Jim that showed us that.
We're just different environment here, though. And I mean, we can say it's too late. The economy is already falling off a cliff. Well, certain stocks have already fallen off a cliff. We've talked about this bifurcation in the markets where you have certain stocks, certain sectors that have really suffered, and certain stocks that have still excelled. Typically technology and AI has still done very well, even in that higher rate environment. But we've got some victims. We had Big Lots last week or 2 weeks ago declaring bankruptcy. You've got Tupperware brands, TUP, overnight here. Segue, like my segue there, AB. Tupperware brands. Lower rates is not going to help Tupperware brands at this point in time. It looks like TUP is going off the board. Is it official? It was rumored last night that bankruptcy filing is imminent here. Did they officially file?
Tupperware to file bankruptcy.
Sounds like it's official.
Sounds like it hasn't yet, but it suggests. I mean, when it gets to this point, and you get the headlines, saying that they're like, reportedly getting ready to file for bankruptcy, and then the stock drops 57%, and the stock drops another 8%, and the stock's trading below 50 cents. That's usually the writing on the wall for Tupperware. I mean, and the one thing I would say though is, I mean, like, how much of this is because of an economic slowdown or because interest rates are higher? How much of it is other factors, like maybe
there's always something going back.
Increased competition. I'm sure you can get on Amazon right now and order a bunch of plastic containers for your kitchen that aren't Tupperware brand, that are probably cheaper, that'll get delivered to your house tomorrow. Yeah. So like I don't know if necessarily that's. I was actually thinking about this with Apple yesterday. And because we were talking about the lighter than expected iPhone pre-orders, and we don't necessarily know exactly why, whether that be because maybe the product just isn't that exciting, because people are happy with their current iPhones, or because maybe people are tighter and they just don't need to upgrade. I think it's probably a mix of both, but I was like, we better hope it's not the latter and just that people don't have money to upgrade to the new iPhone, because that does not bode well for the overall market. That does not bode well for the overall economy. If it's just an Apple specific problem, then we can kind of brush it off and say like, okay, the economy is still fine. But if it's really that people just don't have the money to upgrade to a new iPhone, or that they're cutting back and saving, which there are some other, data points indicating that people are trying to at least save some money right now, cut back a little bit, maybe then maybe that's not the best sign. But either way, like you said, Tupperware getting ready to file for bankruptcy. I don't know what that means, really. I mean, like I would assume that some consumer staples brand hops in and buys this, because I mean, Tupperware is a big brand name.
Sometimes it just means liquidation sales and it's game over. So it doesn't always happen that way. Sometimes you get some companies coming in and buying parts of the company or something that has value, salvaging. Obviously, there's always sales trying to raise money here, but TUP is not listed here. It's now gone to the pink, so it is out of here. And then I just wanted to move on to another stock that's suffered because of high rates as well. And that is Solar Edge. And I don't know if there's any stock that has suffered more because of high rates. And here's a stock that maybe it actually is too late for a company like this. Just throwing it out there. I don't know. Nothing's for certain. But when stock goes from 300 to 20, now we get Jefferies downgrade. I believe it's Jefferies. Let's go to trusty Benzinga Pro. Yes, Jefferies downgraded to underperform, which is their equivalent of sell. Lowering their price target to 17. It was at 27, but not a lot of good news happening here for Solar Edge this morning. It's down another 5.6%. So every time these dogs start perking up, they get hammered with an analyst that was on the wrong side, and the analyst is selling the rip. So just as much as we like to sell rips, analysts like to sell rips as well. When you got stocks and just huge downtrends, they get a little pop up. Analyst says it's time to take my target down because I don't look as bad as I did yesterday, even though they still look pretty bad. So Solar Edge, definitely Solar has suffered a lot due to higher rates. I don't know if this one's going to be able to have a turnaround story. Lower rates will help it. Is it too late, though? That's the question.
Did Solar Edge really go up 11% yesterday? What was that on?
Hopes maybe that the Fed's cutting rates. There's probably hopes and dreams. There's probably somebody with commentary there. Up 11%, and then the analyst says, sell the rip, and Jefferies downgrades. I don't know what the news was yesterday. I didn't follow it. Anybody know? Was there an upgrade yesterday?
Was Solar Edge the stock that had like there was something with like the CFO or something? This was like, probably like half a year ago, maybe 6 months to a year ago. It might not have been Solar Edge. There was some stock where the like CFO had to resign over some, I don't know if there was something going on with the books or not. It might not have been Solar Edge. Someone help me out in the chat. It might have been a different company, but either way,
I think it was ENPH, and it was ENPH, and it was one of the short, the short sell guys, the short sale activists or whatever you want to call them. I forget who it was. Hindenburg, maybe. It might have been Hindenburg. Chat, do you remember who it was? Hindenburg, but it was ENPH a couple of years ago. And the stock got hammered on it, and then it bounced and ran all the way up to 300. Well, it's back down there now, so they're starting to be proven right. I'm not sure if it was Hindenburg or which short seller it was, but we know how they issue these reports, and we know all about their strategy to a certain extent. Yeah, it was ENPH. But I mean, ENPH has suffered too. And the sector that has suffered the most is the TAN. The TAN is still sitting down here near the lows. First Solar is best of breed, and it's not surprising that as soon as we start getting a hint of like the rates are going to go, First Solar is the one. So watch these tomorrow, folks. Again, if the Fed only goes 25, First Solar probably gets hammered. If the Fed goes 50, the algos probably buy First Solar hard right off of the thing. Now, then it's about commentary. So again, remember, expectations are for 50 now. So it's not even maybe enough if they go 50. If they go 50 and then Powell gets on the presser and says, well, we're going to sit back now and see what's happening, then the market tanks. So it's going to be a lot of balls to juggle here. It's not as simple as we see 50 and buy. I think on the initial number, I think that'll happen because that's the algos. But I think if they see a 50, they buy. I think if they see a 25, they sell. But then you got to look to the presser for the follow through. Are you going to get follow through? As he say, yeah, we're looking at potentially another 50. Well, then the algos would rip them. So just keep all that in mind. But you have had a lift into the Fed here. IWM, it's not coincidentally lifting into the Fed. We talk about into events. While you've got small caps and solar and that kind of stuff, lifts into this event, and that's what you're seeing happen. Even EMPH and SEDG would still be lifting too, but Jefferies poo-pooed on that stock, so that's why it's down. I mean, news trumps technicals all day long, but the strategy of just being long stocks ahead of events, that's one of my core strategies. It's an event for the IWM tomorrow. Don't kid yourself.
Yeah, and we do, obviously these stocks, the solar stocks are also kind of, not kind of, they're also election stocks as well. So they will be volatile based on, which way the election odds are swinging. I think we're about like 50 days now away until the election. So that is coming up. I registered to vote in Michigan yesterday, Dennis, which I'm actually excited about because previously I was registered to vote in Missouri, where my vote would have not mattered at all. And now it probably still won't matter, but it might matter a little bit more.
Michigan's a swing state though, so it does matter.
Yeah.
We won't tell you we won't ask you who you're voting for because that just makes everybody mad. So
I'm writing in President Joe Biden.
Oh, that'd be interesting.
No,
Give Biden that vote.
Yeah. I mean, if the market holds up from now until then, he's earned my vote. No, I'm just kidding. The Missouri actually for a while was a big swing state, and I think for like 60 years running, whichever way Missouri went for the election is which way the overall election went. Like it was not that the Missouri was the deciding factor in everyone, but like if Missouri went red that year, then the Republican won. If Democrat went blue, and then since like 1980 something, Missouri has just been red every single year. So, but either way, that's our election tangent for the day. And I saw
they want to talk Dell.
I know I was going to go to Dell too. I was also going to mention, I see some people in the chat talking about the charts. If there's a specific technical setup you guys want to look at, just let me know and we can spend some more time on the chart and I'll go through the different ones on Benzinga Pro, because I know Joel has a nice layout where we're looking at the different time frames. So we can still do that. It won't be the exact same. It won't be as good. Our analysis won't be as good as Joel's, but we can still try our best. So Dell is trading higher after Mizuho initiated coverage on the stock with an outperform rating, announced an $135 price target. It's trading up about 2.7%. And I don't know. I mean, like in my head, Dennis, I always kind of like think of Dell and Intel. I think it's because like my first laptop ever was a Dell laptop with with an Intel chip in it. So like I think of the companies as like very similar, but they haven't really been that similar in terms of stock performance outside of the fact that they've both gone down in the past few months a lot. But Dell here, I mean, got crazy all the way up to 180 when everyone is all hyped up about the AI,
server business,
AI server business and all that stuff. And then, kind of like almost, I'm not going to compare it to SMCI, but like, then you see kind of the exuberance.
I would compare it. The comparable is there actually with SMCI, and don't kid yourself, with SMCI was ripping and going over $1,000. I was when Dell was doing that as well. So it was hype from SMCI, and they're like, well, if SMCI is going to go up this much, we're going to buy Dell up this much too. Never probably belonged at $180 or $179, whatever the high was. Now, did it belong, down at 86 when it got there a month ago on the August 5th low? Yeah, when everything bottomed? Probably not either. So as much as they overshot the up, they probably overshot down too. I think you're starting to get into an area where it does make sense here. I'm long Dell. I'm averaged in from 111, I think. So I'm back up in it because, never found average down, Joel's strategy there, because I originally bought like 135 and I bought more at 101, I think. So that's a joke, by the way. Never found average down. But sometimes I do it when I feel like I'm still in a good company. I just timed it wrong. So I'm in Dell. I do think there's upside here, and I do think the server business and the valuation on Dell is not crazy. And it's done some work here too. I mean, from a technical basis, we had the big sell-off, then we had the big rally, then we sold off a little bit more, and now we're trying to perk back up here again. So does a headline like this drive it higher? Potentially. I mean, it already is here this morning. But I mean, when you look at the Benzinga Pro and the details here, Dell PE, where are we, AB? It's not crazy. Forward P is 14.
Yeah, and the price to sales is 0.9. So that's not bad either, right?
Not crazy valuation here.
Not at all.
Not at all.
Real quick, Dennis, we do have these numbers coming out real quick. Again,
let's go wide.
No, I don't think so.
I'm going wide because they all. Sorry, I'm out of here.
All right. See you.
Sorry, Algos, you can't pick me off. I just canceled all. Cancel all button. That's what I mean. Go wide. Cancel all. Ding! All your orders are gone. No picking me off on the number, Algos. Try again, high frequency trader. You're not getting me today.
So last month, or at least in July, the retail sales came in at a positive 1%. That blew past the expectations. The median forecast is for negative 2.2% retail sales here in August. So again, it is 8:30 now. Let's go to our news
Putting the orders
feed
back out there
here in Benzinga Pro. Retail sales came in at positive 0.1% versus negative 0.2% estimate, 1% prior. So it did drop month over month, but it was in the green against those red estimates. USA retail control. Don't know what that means, but it was came in line. So I think that's good. All right. And yeah, is the market moving on this? Let's go over to the SPY. Let's see.
bounced a little bit and then right back down.
I also changed the chart because someone asked for white backgrounds. I don't know if this is any easier to read for you guys. So again, sorry in advance we don't have Joel's charts with us today. But hey, if you guys tell me you want the white background,
We're good. We don't mind this. This is all good.
All right. We're good. But no, to your point, Dennis, talking about your never frown average down. I was talking to my buddy about this the other day. I was like, isn't it cool that the market, like stocks just go up over time? I was like, could you imagine if it was the other way around and
They
stocks just
down.
went?
Well, that's
and
China.
Just went down.
They just go down over time. So we need a saying on the other side, never frown, average up. I don't know how we would work that on the short side of it, but yeah, if you're in China, that doesn't work. Actually, if you're in Japan, didn't really work either. It has for the last 15 years, but we still have. Did we ever get back to the Nikkei highs? I think we did. I think we finally did.
We did.
It took like 35 years, but we finally got back to like that 1995 high in the Nikkei. 35 years later. So yeah, they do eventually come back.
Yeah, I mean, Japan does a lot of things really, really well. And the engineering, the cars, the certain products. I love my PlayStation, but the stock market, they should, maybe they need to take some notes from the US. So there's a reason like Buffett and these guys aren't going heavy into Japanese or Chinese stocks. What's the big Chinese ETF? Because I'm looking at KWeb right now, but what's the other? It's like MSCI or something.
Well, FXI is the big one.
FXI, that's right.
I usually follow the FXI. It's very liquid. I trade that all the time, and just in hedging myself. If I got some Baba, Baidu in the trading account, I'm hedging myself with those. But FXI, KWeb is more of the internet one. So they've got KWeb's Baba and Baidu and Tencent's in there, obviously, too. So, I mean, sometimes it's just good exercise to actually just go look. And then there is, there's other ones as well. So there's a few you can trade, but FXI is very liquid. It's the one I trade the most.
Jake is telling us to get a real job, which, I mean, sometimes look.
Get a haircut, get a real. He's a big George Thorogood fan, too.
I mean, look, a lot of times I'll say that doing this doesn't necessarily feel like a real job a lot of times. But you guys got to realize, at least, Dennis is trading like full time. I, after pre-market prep, have a bunch of other things I do here at Benzinga.
I need to get, that was directed at me. I need to get the real job.
But this is my favorite part about working here. And again, like, I'm
a liquidity provider.
I know I'm lucky. I don't know what else to say other than, I guess thank you. I appreciate that, because I would hate to be sitting in just like a very big corporate 9-to-5 doing like, I don't know. Some of my friends, they talk about their jobs and I'm like, man, I'm lucky here at Benzinga. So, all right. Let's see what other, we do have our guests waiting in the background.
Let's bring him in. David Prince is ready here, and we need to get off these tangents here and bring back in, because they're making fun of my job here now. So it's time to go get David. We'll tell David to get a real job too.
All right, without further ado, let's bring in David Prince from T3 Trading. All right, David Prince, welcome back to Benzinga's Pre-Market Prep. How are you doing this morning?
I'm good. I just found out we don't have real jobs, so I'm kind of feeling very chill. I'm like, I don't have a job, I'm just chilling.
I was at Bright Trading for a long time, and Don Bright used to always say, like, people would come up to me, he's like, well, what do you do? How do you help the world? How do you help the economy? And Don Bright would say, we are liquidity providers. Without us, people wouldn't be able to get in and out of their positions easily. And I'm like, you know what? That's true.
Pretty important.
Yeah, so he's like, you have a very important role. So don't let anybody tell you don't have an important role. Without traders, investors couldn't get out of their positions. And I'm like, you know what? That is the truth there. So that's what we tell them, David. We are definitely liquidity providers.
All right. Well, David, we're gearing up for this federal or the Fed's decision tomorrow. Interest rate cuts. That's the expectation. Before we get into what you think the fallout from that will be, give me your prediction. 25 or 50. What's it going to be?
I have to say, I think like most people, I've been like every single meeting, it's so clear, right? It's most like transparent Fed we've ever had. I mean,
True.
if you're old like me, you remember the briefcase and us guessing. Now it's like you know what he ate for breakfast. I don't know. I have zero
It's a hard
problem.
all
I
that to
don't
say,
know.
we don't know.
It's
It's a hard
very
one.
easy to say, well, 50 basis points isn't a reality. It's actually very much a reality for the first time, in my opinion, that I can remember with him. And up till this week, I started to say, nah, it's still a quarter point. So here's what I'm going to tell you. My playbook is that the dot plot, which we only get a few times a year, and how he conveys this cut is everything. And 25 or 50 is maybe only 30% of what's important. That we have a lot built in into 24. And by the way, we have a lot built in terms of cuts in 25. So I'm going with dot plot and how he conveys things being 70% of how the market reacts.
So this could be on the presser, what I was saying earlier too. The presser may actually be more important than the initial headline.
Oh, no. It's, I mean, I don't mean to be
All of it.
cocky here. I'm sure it is, in my opinion. I really am. Because he can do 25 and be so dovish and give you almost, there are no guarantees, but he can give you a very strong indication there's 75 basis points this year and another 100 next year. And at the same time, tell you that it's normalization and it's not to save the economy. And the markets can get pretty excited off that, right? Where they may trade down for a quick minute. So what I'm doing is basically planning how might the market respond on 25 basis points is probably a buyable dip if it's aggressive, especially if we have a dovish forward guide. So
these overshoots on the initial headlines, do you trade those too sometimes, David, where sometimes you'll see the algos like buy relentlessly on the headline or sell relentlessly on the headline, and then we get the snapbacks? What's that?
I'm good with planning. Headlines, I'm not so good. I have like lost more money trading headlines in my youth than I care to admit. So I don't trade headlines much. But on this, the difference is I'm preparing for the headline, so I will trade it. And I have, people in Inner Circle know Fed days are actually some of my best days. Maybe I'm just weird, but because I always tell people don't trade Fed days. Like most people, I really think should not, or at least wait, like absorb the news. I'm not a good reactionary trader, like most of us are taught. Don't guess, react. I'm kind of the opposite. I plan. If X happens, then I'm pretty darn sure Y is going to work. So if I hear X, I'm doing Y. So, I'm prepared for the headlines. But typical headlines, whatever raises guidance, blah, blah, blah. I don't really chase candles too much.
David, before we
go ahead.
I was just going to say, before we continue, I don't know if you're using like a different mic setting today.
I am. Does it suck?
It doesn't suck. It's just not as good as we're used to hearing.
I'm going to make sure it's fixed for the next time. If I move this up, is it any better? If it's still
a little bit.
Okay,
I'm
sorry.
A little bit. No, it's just not as crisp as what we're used to hearing from you. I know you.
My apologies.
It's all good. All good, brother. All right, so let's move to some individual names right now. We've got some tech headlines. You had Apple trading down yesterday on some weaker than expected iPhone sales. I know you're not really trading the headlines, but like, what's catching your eye right now in terms of individual names?
Sure. Well, about 2 weeks ago, I went, and this is less a name, but more a sector, but I still should say, at about 95, I looked at XBI based upon the time of the year and that we know we're getting a rate cut. And I really thought it's time to get aggressive again. And it's something I'm very familiar with and had a huge trade in at the end of 23 into the beginning of 24. And I said, God, this is so similar, except the difference is we're going to get a cut this time. And a lot of smaller stocks, oddly enough, don't like to front run too much. The rest of the market is thinking 6 months in advance. Small caps sometimes need to actually have something come to fruition. So I thought it's biotech. So my points here is I've been pretty aggressive with XBI since 95. I really think we're going to get over that 103 and have a breakout that looks a lot like IWM through 210 to 228. I think is similar to what we'll see with XBI above 103 at some point by the end of this year to a 110, 120.
I mean, what suffered more than small biotech from the interest rate hikes that we have?
You cannot find a sector. And if you look at the charts, BKTX, a big holding of mine, Immunome, a big holding of mine, all the charts look beautiful. BKTX, Immunome, TGTX. So a lot of its components are very powerful. And then it's weird. I've been pretty focused on small and mid cap. That pullback we had 2 weeks ago, not the like major drawdown. I mean, that Friday about 2 weeks ago, not August 6th or 5th. One of my biggest buys was a firm, which is not typically what I do, right? I'm going after Meta or Nvidia. I did buy Nvidia that day, but the point at 101s, but the real like buy for me was a firm right in front of the 200-day at 36, which is getting ready to pop over 45 and break out to 50. So a firm, big name for me. VKTX, big name for me. Immunome, big name for me. So definitely more mid and small cap than I've been in a really long time.
I got a question for you, David, and I saw you tweet this yesterday. A firm is presenting today at the JP Morgan conference in London. It's hard to find a master list of where all these companies are, are presenting. Do you have like a go-to spot? Like we try to put it together at Benzinga. I know Briefing tries to put it together. There's a lot of different companies that try to put it together, but it's hard to get that like master list. Do you have a spot, like a go-to spot where you get
no
this
BS?
list?
I have a buddy who's one of the bigger news guys on the street. You guys probably know. What does he go by on Twitter? Flow Rider, Florida Trader.
Okay.
Anyway, it's my buddy that I'm sure you probably know.
Beach Trades?
What'd you say?
Is it Beach Trades?
No, here, let me tell you. But the bottom line is he's always there in front of everyone. So when he tells me, I know, because you're right. It is so hard to figure out like what the master lead. He goes by Mark Flow Chatter.
Yeah, I follow Mark.
Anyway, so he has a great he has a great news let's just say setup, and he's there before everyone else. I go through trade the news and Briefing, but there's nothing like you said that really gives you no, I really do go through Benzinga. Actually, I never used to. You guys are an easier use. Like I find Benzinga easier to use than a lot of the old school ones, like the Trade the News and Briefing and all those others. So when I go, because I'm a tech idiot, so Benzinga works for me. Anyway, no, I don't have a one size fits all for news items.
Okay, we were hoping you had the master list because we've been trying to find who actually puts together the master list here.
Well, Dennis, you just identified a hole in the financial, data and news market. You fill it.
Benzinga's going to start doing it.
That's your real job right there, Dennis. That's
I don't even know what time they report today. Like it should be so simple. I look. London, everyone's like, what time? I still don't have a confirmed time.
Wait, is the JP Morgan health, or no, it's not the healthcare conference, obviously.
It's like consumer conference, JPM.
Okay. Well, let's start there, just knowing which conferences are going on, let alone what companies are speaking.
But listen, they matter. NVIDIA conference, granted, it's NVIDIA, but it totally turned the market a week ago, right? So you do have to pay attention. I remember talking on Twitter saying, listen, this Goldman Sachs conference could be the biggest moment of the week. And I had a guy say, well, why would this conference mean anything? Blah, blah, blah. It turned the entire market.
Yeah, they're big. They're like events. They know when you get a big company, you get a big CEO presenting there, it can turn the entire, and sometimes they drop a bomb. Like they just raise guidance like Oracle did last week. And I'm like, and that's why I was like, really, I was caught. I was actually short on that. I'm like, oh my gosh.
Sorry, brother.
I got hammered. That's,
let me make you feel better. It got to 84 relative strength. That extension was so insane. I actually did a really decent sized short pre-market above 170. I covered for 2.5 points and missed 10.
Yeah. Well,
no, maybe 11. Maybe 11. It felt like I lost money. It was maybe the worst short of my life. I made 2.5 points and missed 11.
I wish
that was insane.
2.5 points.
David, so when we're talking about the overall market, trading is never really easy necessarily. I know it felt easy at certain points of 2020 and 2021 when everything was just going up, but especially when there's no like clear defined trend of either like a strong bull market or a strong bear market. And it kind of seems like we're in that just choppy zone right here. I mean, you can see just this is on the S&P 500 daily chart. Like, what is your strategy like when it is like this and we're up one day, down one day, down? You know, we had that August 5th Monday with a yen carry trade, the whole market, you know, worst market day, and then the rest of the week we're all green. Like, what do you do when you don't know what's going to happen every morning when you wake up?
I so believe in this, and I write about it on Twitter. I really mean this. So, like anyone who's like more new to the game, I don't care if it's 3 years, smaller money. To me, this is everything. This is like one of the most important things I give people, and I don't fancy myself the smartest guy in the room. I do not care about making money every day. I used to, like 20 years ago. I care about when opportunity comes, making use of it. And I really have learned, and it's bona fide works for me and hundreds of people that have learned from me, which is literally 1 day can make your week, 2 days can make your month. And it's not because you're some big shot or you pick the best stocks. It's because you do less in between. So like it's out there. The trades are documented. When that August moment happened, right? I didn't buy everything. I wasn't not scared, but I really looked at the risk reward and I went hog wild on NVIDIA at 97 to 91. And I really did hold a lot of it to 120 and some of it to 130. I did buy a lot of Soxel at 25 and I got out early at 36. But my point is those trades made my month. I didn't need to worry about day to day. So I always say, pick your spots, size right, and do less in between. It wasn't last Friday, the Friday before. I said there is a great level all week. People are like, should we buy the dip in NVIDIA? I said, honestly, I'm not in a rush. We just bought it as low as 90. But 101 is a spot. We know it's a spot because we bought it there and made a lot of money off the Microsoft guide. You guys won't remember, but Microsoft got it for higher CapEx. They took NVIDIA down, which was dumb as hell, and we bought it 101. So I said 101. 101. That's our spot. Anyway, it got there Friday. I bought it. And the next thing we knew, a couple days later, it was 120. Do those trades. You don't have to be a genius stock picker. I bought NVIDIA. Duh. Like, oh, wow. NVIDIA's for.
Yeah, where did you hear about that one?
I don't know. Did some homework, like in some really smart guy on Twitter I followed. But that's what we do. And if you compound that over a period of a year, you're doing so much better than the average investor who's figuring out how to make money every single day. So up and down markets, I think that's more important than ever. In trending markets, you don't get that opportunity. You have to hold your winners longer, take your losers faster. But in these choppy markets, that's how to win. I mean, it's just, by the way, I went to Soxel again that Friday. Bought it in the 25s. Again, sold it early because I always do. Sold it at 30. But it was still 20% in a few days. So that's what we do. I'm not excited about the market here as an investor, right? I'm investing in XBI and a lot of names because I see a catch-up trade, but I don't look at this market with the S&P above 20 times earnings and start to get excited and say, now's the time to invest. If you missed the Qs at 260, please put grandma's money in now. We could, there's probably, if you're looking out 5 years, ignore this. But if you're looking out the next 6 months to a year, I can't make a case as an investor to say there's far more upside than downside. I can't. Maybe you guys can. So I do think it's volatile moments where you make your year.
I mean, maybe we're moving into this type of a market, more algorithmic. Maybe it is the type of market where we do need to be more traders and longer term investors. And I'm not talking to the person of the day job, but if you're looking, maybe just got to lengthen those time horizons.
Yeah. I mean, my meat is like 2 weeks to 2 months, right? Certainly not a day trader. And if you ask me where the market is a year, like I'll literally be like, okay, see you guys. I don't pretend to know. So it's
nobody's got a crystal ball,
right? Well, some guys think they do, but it's like that.
David, we have this, we've got your free book to prepare for the coming uncertainty in the stock market, which is kind of just what we've been talking about. Give us a little tease on that book, what it is, what can people, gather from that? We do have the link in the description of the video. I'll drop it in the chat as well. It's t3live.com/Benzinga. You can also hit that QR code on the screen.
It's really about how to figure out sizing and doing less. So in other words, not having 20 positions, and if you want alpha, to figure out your 4 best ideas, to do maybe nothing on Monday and Tuesday, and on Wednesday, when your, say, A idea, right, comes into a great buy level, doing it. And then if you miss your A idea, right, because you were at the dentist, and you miss your B idea, and you have the C and, say, the D and E idea, to actually penalize yourself, not in a bad way, but not do them. Because you want to focus on your best ideas. I see it's like my edge is not I'm the greatest chartist. It's just logic. So if you miss your best idea, your first 2 or 3, you know how many guys are like pissed off and emotionally gonna, on a cute cash flow idea, try and fix it versus a very average idea? A lot of guys. So it's more about that. That's where my edge is where to focus day to day, week to week, and month to month. And honestly, how to take a loss and hold a winner, like real basic stuff that people seem to still lose track of.
All right, well, we've been on the line with David Prince, of course, coming to us from T3. We love our T3 Tuesdays here at Benzinga's Pre-Market Prep. David, thank you again for hopping on with us. Enjoy the rest of your day. And guys,
good luck tomorrow.
Appreciate it, guys. Go check out that book from David.
Thanks, David.
We'll chat with you soon. All righty. That was, of course, David Prince. We've got a few more minutes left here. Dennis, real quick, I want to talk some Tesla. Did you, when you sold some of your position, was that, you said because you were talking to a friend or someone, you didn't think that full self-driving was as advanced as you'd like it to be heading into this robo-taxi event?
Yeah, I got too big. I mean, at a certain point, it's where you're comfortable. And I think I got too big in the stock where I just didn't feel comfortable anymore.
Like on down,
I'm still big. It is still the biggest position in my long-term portfolio, and I actually did add some of it back as well. So it's one you struggle with it because Tesla's just a tough stock to hold. First of all, because the thing moves 3-4%, seems like every day. So it's a tough stock to hold. And then when it's the biggest stock in your long-term investing portfolio, your investment portfolio really moves. Like in June and July, my investment portfolio exploded because I have so much Tesla. And then in the end of July and into August, it got killed because I had so much Tesla. And I was like, maybe I'm just too big Tesla. I'm like, my whole investment portfolio is now dependent on Tesla. And not that, but usually when I enter a position in my long-term investment portfolio, and remember, folks, at one time I had over 100 stocks in my long-term investment portfolio. I've been, accumulating money for a long time, taking money that I've made, and from my trading account and moving into a long-term investment account. I'm not that heavy anymore. I have like maybe 25 stocks in my long-term portfolio. So my concentration list, if I take a starter position, it's usually 1 or 2% of the overall portfolio. Tesla's up to like 7 or 8% of my overall portfolio. But at one time, I think it was almost 10. So I'm like, it's just felt too big. And, and maybe if you're all in, there's investors on Twitter that I follow, they're 100% Tesla. I'm like, I can't stomach that. I can't stomach just having it all in one stock because what if FSD does fail? What if he doesn't solve it? The stock goes a hell of a lot lower. That's what's going to happen. I think Tesla is a binary trading event. Solve FSD, stock to the moon. Fail to solve FSD, now you've just got a car company and the valuation's a hell of a lot lower. Although they got the humanoids, they got
energy
business,
storage,
got a lot of stuff they're cooking up there. So,
yeah.
I think there's a decent opportunity here where Tesla, I can see a path where this could get to $1,000 a share. I can also see a path where this could be down at $100 a share. And that's when if FSD was to fail.
Yeah, the reason I bring it up, I was talking to a guy yesterday who's kind of like the, people like you're talking about on Twitter that are 100% in on Tesla or 100% invested in Tesla. And this guy also has a Tesla. And I was just talking to him. I was like, do you have the full self-driving? He's like, yeah, I pay for it. He's like, I didn't download the newest one because there are some safety features that he doesn't like on it. And I was asking him how it is. He was like, oh my God, it's amazing. I was like, how many like interventions? Because he has to drive like 30 minutes for work every day. I was like, how many interventions do you have to do? He's like, oh, hardly ever. He's like, sometimes, like a semi will come into my lane and I have to stop because the car. And I'm like, well, that sounds like a pretty big deal. He made it sound like it was hardly any interventions. And we started talking about it. It was like still some interventions.
Oh, it's not there yet. Don't kid yourself. You're not going to jump in that thing and drive across America and get there safely if you're not intervening. That's why it's supervised there. It is not there yet, folks. If it was there, this stock would be $500 or $600 a share. It is not there. So that's why I'm saying is the bet is, can we get the 90? We're at 97 or 98%. Can we get the last 2% without LiDAR, without geofencing, just be able to do it? Musk thinks he can, but we know Musk timelines here too. It'll be interesting to see what he has to say at the robotaxi event, but they are ways off. And it spooks me when I do talk to some Tesla, like I talked to my buddy Pete from Barron's Rings, and he makes, like he's actually made the Toronto Raptors rings, Cleveland Cavaliers championship rings, like he's big. And he says it's a ways off. He's like, it's so cool. But he's like, we're away. I'm like, how far are we from this car? He's like, no, we're a ways off. So that, makes me scared. I'm talking to him. I'm going to actually get it. My next vehicle will be a Tesla. I'm going to buy a Tesla.
You should, yeah.
Yeah, no, I will.
And especially right now, though, and I like at this point, it's not that big of a deal for Tesla because, like you mentioned, there's so many other things besides just the car part of the company. But the Tesla resale values have absolutely plummeted. Like you can go buy like a Tesla with not that many miles on it right now, for like $25,000. They've gotten like pretty affordable at this point.
This is why the stock went from 400 to 150. I think a lot of that is priced in, and a lot of that, don't kid yourself, has to do with as much as Solar Edge suffered because of higher rates. Don't kid yourself. The car companies suffered because of higher rates as well. And don't kid yourself as well. If we are actually going into a lower rate environment where they're going to start cutting, maybe aggressively, Tesla benefits from that. Tesla directly benefits from that. But it will be driven by headlines. It will be driven by FSD news. This is, a lot, because if they weren't working on anything else, if Tesla was just a car company, it probably is a $50 stock like Gordon Johnson says it is. But they're working on a lot of other things. This is a technology company now. And I was on for a lot of years. If you listen to the show back to 2014, 2015, you hear me talk about Tesla, I was like, well, how, are they worth more than GM and Ford? I mean, it doesn't make sense. It did make sense, though, because they were turning into a technology company. So I think the valuation can make sense here now, because people say, why are you paying 90 times earnings? Well, one, the earnings are suppressed right now. They're doing a lot of money dropping in R&D, don't forget as well. And the cash flow is good at Tesla still. So interest rates going down, I think there's an upside here. But, you guys don't want a full Tesla show here. It's the biggest position in my long-term portfolio. And I'm making a bet. But that bet doesn't necessarily have to work out. If they fail, if FSD fails, if FSD goes out and kills a bunch of people, Tesla gets lawsuits and, all this stuff starts happening, there's a path where this stock can go lower here too. So that's why I'm not 100% all in on Tesla.
There you go. And we're not doing a whole show on Tesla, but we can spend 5 minutes on it.
Wait, I talked it for a while because the chat was yelling at me for talking Tesla too much.
Let's
I get excited about it. I'm excited about Tesla, but
let's talk some Chipotle, because we mentioned Lululemon last week as a stock that had been beaten down and starting to perk up. Of course, Chipotle was in this huge downtrend. The CEO left, Brian Niccol, to Starbucks. But since it bottomed here at right around $50, it's starting to perk up. Dennis, you were telling me they did a showcase on CNBC about Chipotle. I wanted to talk about it more from, maybe it's just on my mind because I had it last night for dinner. But I was going to say, like, from a technical perspective, it's funny how this seems to happen quite often. And, I know you or I, Dennis, aren't necessarily the biggest technical traders, but like sometimes you get this bounce and it's like right at $50. And I'm not that smart of a guy. And I'm like, oh, I can even recognize that $50 is like a round psychological number. And it got down to right at $50. I mean, dipped below it a couple times, but then came right back to it. And now we're back up at 58. My question to you is, do you think Chipotle has bottomed here? Would you be willing to take a stab at it? What is your opinion on this?
I think it has bottomed. I don't know if I'm willing to take a stab at it or not, but I think, we've clearly turned the corner here. The valuation has always been crazy at Chipotle. It's still 43 times forward earnings, which seems insane to me for a restaurant, because a lot of the restaurants trade 25 times. So, but it's always commanded a premium multiple because you know what? This company has always executed very well. And I mean, look at the new thing they were talking about on CNBC last night, the automated avocado slicer, where it can process like 30 avocados in 30 seconds and have them all perfectly sliced up. I mean, this is stuff that they work on, and this is smart actually, because the biggest, I've run fast food restaurants, like I've had in the past there. I don't know if you listen to the show for a long time, but I had a Quiznos restaurant where I was, a passive investor, and then I was actually trying to look over as one of my friends said, "Hey, Denny, I'm, he managed a Subway," and he's like, "Oh, you got to try these Quiznos subs." It's like back in 2001. He's like, oh, they're really good. So anyways, I went 50-50 on him on a store. He was supposed to run it, and then he got a better job at the bank, and then we kind of hired managers. Long story short is, I know, though, looking at the numbers, the biggest expense for restaurants is, one, food costs, but number two is labor. And if you can start figuring out automation in the labor, all these restaurants are going to make a hell of a lot more money, because labor is a huge expense. Even though they're paying most of these people minimum wage, there's just so labor intensive. Think about somebody, on a sub making all your sandwiches and checking you out and making sure and cleaning the restaurant, doing all that. Imagine you could do more automation in that. The margins all of a sudden start to get a lot better. So if Chipotle is the first one starting to figure out, hey, we don't have to sit a person here and cut avocados for an hour. This machine does it in 30 seconds. And then another machine doing this, another machine doing this, and all of a sudden, you have two people running a rush hour store instead of 6 or 7. That's huge savings. So that is something to consider, is that labor is very intensive in fast food, and there's big savings there if they can figure out automation in there.
Yeah, it's kind of sad. I hope people don't, all lose their jobs because of this stuff coming in.
That was the conversation we had yesterday, with our guest yesterday, just talking about the potential for that to happen. And it is there. And that is scary. And then you're like, well, who's going to consume if they don't have any money? I mean, there is, education is going to be more important than ever for your kids now, because, again, it's always been important, but it's going to be even more important because there's going to be a lot of jobs that automation is going to take away. It's going to create some jobs, but these, people who say automation is going to create more jobs than it kills, I don't think so. I think it's going to kill more jobs than it creates. I think it's going to create high-end jobs, very, automation, programming, skilled jobs. But, even to programming, there could be an argument there. It's going to kill some of those jobs too. It's going to cost people some jobs, absolutely. So there's, stuff to think about there. But margins for, individual companies could actually increase with automation. I think Chipotle is showing you the way. So I'm interested in Chipotle here.
All right. Well, it is past 9 a.m. Real quick, looking at some other headlines we may have missed. Amazon killing work from home for the company. I don't think that really has stock market implications, but it does have, workforce implications if other companies take the lead from Amazon and say no more work from home. Which is kind of ironic because I feel like Amazon was one of the companies that benefited so much from work from home. Everyone was ordering stuff online during COVID. And we also, Teladoc is trading higher this morning. I don't know what, it's up about 10% this morning.
More stock.
Yeah, I was going to say,
I buy more stock every day.
I don't know what else.
Price target was raised at Jefferies to $10. Jefferies positive on it. That's, one of the reasons that the stock is trading higher here this morning. So there is some positive analyst commentary here. I mean, let's be honest. This is an $8 stock. This has been one of the worst stocks. $308 back at the end of 2020 when nobody was going to need to go to the regular doctor anymore. There was all going to be Teladoc Health for everything. Well, that didn't work out. Stock is $8. Is there a path where this can be a turnaround story? Sure, there's a path. There's also a path where there's no story here. And bankruptcy, that's a path on this too. I don't know if I'm making the bet, but I know I've seen a lot of stocks go from 300 to 8 and not a lot back to 300. So I'm just staying away from this one.
All right. Well, that'll be a wrap for pre-market prep for us today. Thank you to everyone who tuned in. Thank you to T3 Live and David Prince for joining us today. Tomorrow, it is, of course, the Fed day. We have Tassoni coming back on with us at 8:35 a.m. to help us break down that decision. And more important than the decision, the reaction to that decision. We asked earlier, people in the chat were throwing their predictions for 25 versus 50. I saw someone said 75. I saw someone said no cut at all. So we're all over the place. So we shall see. Go Cards, he's saying, I don't know if he's talking about the St. Louis Cardinals, but we're officially toast out of the playoffs. I'm sad about it. I don't want to think about it. Other than that, that's going to be it for pre-market prep today. Dennis, any final words?
Just expect, I think you're getting a little melt up ahead, but it's not going to be that simple. Expect maybe some nervousness too ahead. So you could see some chop. Obviously, it's all about the Fed tomorrow. So we've got 24 hours before, a little more than 24 hours before we find out if it's 25 or 50. That is the question.
There you go. All right, guys. Again, thank you for tuning in. Smash the like if you haven't already. We will have live trading starting up right after this, so make sure to stay tuned. This stream will redirect you there automatically. You don't need to do anything. We've got a little bit of AI on our own helping out with that.
There you go.
And then we'll see you guys tomorrow morning.